So by popular, hey, wait, not by popular request. Ta-ta-ta-ta. Good day, everyone. I hope you guys are having like a nice trading week. So by popular request, I'm going to show you guys how I took this particular gold trade, the one that I shared in the group. I think by the time I shared the markup, this was where I had marked up for price to tap in, and we're getting to this was my target, okay, for that particular trade, and I hit my target. And I'm expecting to see price get to 2720 in the near future, somewhere around this area. Okay, so 2720 first, and probably we clear these points. So let me show you guys, because by popular request, a whole lot of people wanted to know how I was able to call that particular area and then price tap into the area and then moved in our favor. Okay, so I want to show you guys how we arrived by the trade. So let me show you guys. I think the screenshot, if I still have it, when I marked up. I think this was the before. Okay, so I marked up this area saying that I thought price would get down here, tap into this, and then we should get to 2.6, somewhere around this figure. Okay, and if the date is here, this was when. All right, today is I don't know when this was, but I think this was 2 days ago, and I think the cursor was on the Thursday, 16th of January, pointing that is today where I'm making this particular video. So let's just go into it. Enough of the long talk. Let's go into it, and I'll show you why I thought price was going to come down here and go up, of which price did. Okay. So price on the 1 hour time frame, price came down here and actually exploded to the upside. So let's go and start the thought process. Like I've always been teaching you guys, I would expect that we start our trades, the framing of our trades from the higher time frame. Okay, so let me make this big so that we can all be on the same thing. So I prefer that we start our trading on the higher time frame. And on the higher time frame, we're looking at time frames like the weekly and then the daily time frame. When we are on these time frames, what do we want to see? We want to try and establish the market direction, okay, where we think the market is going. So let's go to the weekly time frame, 1 week. All right. So on the weekly time frame, let me zoom out so you guys see what gold has been doing for the longest time. Okay. So for the longest time, all we see is that gold keeps reaching for higher prices, even since this entire point. Okay. Gold just keeps printing higher highs and higher lows. So for this point, we would want to think that gold is in an uptrend. Okay. But the weekly time frame alone is not enough, because this is a very big time frame. And if you want to use this to frame all your ideas, because there was an entire week where the market was selling, an entire week where the market was selling, another entire week where the market was selling. But it gives you a fair idea of where the market wants to go. Okay, the market wants to go up. So since we know that, we come to our daily time frame, and on the daily time frame too, we're looking for the same things. Okay, so on the daily time frame too, we want to see where the market is reaching for, and in this, the market looks like it's reaching for higher prices. Okay, so once this week started, we needed to identify where we were in price. Okay. And identifying where we were in price, let me delete the markups for gold, and then I show you guys. So this was Monday, Tuesday, Wednesday, and Thursday. On Mondays, I personally prefer not to trade because I like to start trading from Tuesday, Wednesday, going, okay, with the weekly profile. So let's see what happened on Monday. On Monday, price dipped all the way down here. And based off of the way I read the charts, I already decided, okay, that the market was going to be in an uptrend. That's how I decided to frame my analysis. So within this week, I was looking for buys, and this is how it works for me. So I'm going to show you my thought process. So within this entire week, I was looking for buys, and sells did not interest me. Any sell move I saw was more like a very temporary move that I was not interested in. Some of you hit me up from the group saying that you were holding your sales, and I remember telling a couple of people that if you want to hold your sales, then me personally, I would not advise it. But people can do what they want. Anyway, so this was Monday. Monday, we saw an extremely bearish candle. Okay. And if you are looking to the left, all right, we had this particular imbalance here at this swing low, which got filled. Okay. This imbalance was also filled. And this imbalance was filled more than 50%, is why I personally did not think that price would want to reject all the way from here down here. It's a very long way to go for price. And I didn't think it was more feasible because if you look at the internal range liquidity here, price has already cleared 50% of it. So what's the point? If we have two liquidity points right here, this and this, forming these relatively equal lows. Price has also cleared this liquidity here that was looking in the form of a little channel. Let me turn off my rulers. Set my rulers, my magnet. Over here. So all the liquidity to the downside had been cleared. So we are looking at upside liquidity. Okay. And on the daily time frame, we've seen market do the daily, I said the daily candle on Monday, do this. All right. I like to personally start framing my trades on the 4 hour, 1 hour time frame and below. Mostly I stick to the 1 hour time frame. So after I saw what Monday did on during this week, on Tuesday, I'm going to start looking for points where I can start framing buys. Okay. And when I taught you guys how to frame buys in this particular on my YouTube, on this channel, wherever it is, I've taught you guys how to frame buys. One of the most common setups you ever see for a buy is the market trading past the Asian low, trading into what's the name, an order block, and then exploding to the upside. All right. So we had Monday's move right here. Monday opened. Let me start the week with this. Okay, so this is where our week started. So this is Monday. Any of the purple boxes you see represents the Asian range. If you want this indicator, just type send the indicator, I'll send it to you. Okay. So this is Monday, and this entire place is the Asian range. So for a very classic buy setup, you see market move past the Asian range and then trade into an order block and then explode to the upside. Okay, trading is sometimes that simple. So we framed our bias. So all we're waiting for is a good setup. So at this swing low right here, what can we see? We can see our order block. The order block is what? The last candle before the upside move. Okay. And in this case, this was it. I personally was looking at the liquidity. That's why I marked this very small zone, which was the fair value gap. Okay. For those of you who can't see it, there's a gap in between this candle's high right here and this candle's low. So that was what I was framing for this particular buy. Right. This gap. Very tiny gap, but it's there. Okay. So you need to do your analysis quite extensively. And then we saw price come down here. So this was Tuesday. Monday, no trading. Okay. Tuesday, our Asian range was formed. We're expecting a buy. So we're not expecting price to move above the Asian range and then we sell from there. We're expecting price to move below the Asian range, tap into our order block, which is right this candle over here. Okay. And then for gold, XAU USD, we want to buy or sell, take our trades in the New York session. And that's what I did. So the London session, I usually consider it noise. And I like to start trading in the New York session. Okay. The New York session is going to open somewhere around 13 hours UTC. Okay. And the reaction times usually for these are going to be 13:30 and 14:30 because at 14:30 UTC, once again, okay, is when the New York Stock Exchange opens with a lot of volatility. All right. So this was the day over here. So let's go on the 15-minute time frame so we can actually see the time better. All right. So this was the landing session, started somewhere around 8. And once the New York session opened here at 13, okay. So I have these colors down here with my indicator just to help me know when a session has started and the times that I want to place trades in the market. Okay. So the very first hour of the session I like to stay out, which is between 13:30 is a good reaction time, but I personally like to take my trades at 14:30. Sometimes I can take it at 13:30. I think with this one like this, I took one at 13:30, and when price came all the way down here, I still didn't fear. There was no FOMO, and I took another one at 14:30, and God willing, it went well. Okay, people like to say that in the forex market there's no God and whatever, but well, it's my own belief, and God willing, it went well. Okay, so just right here, okay, we want to take our trades at either 13:30 or 14:30. Okay, so at 13:30, this is a good opportunity when price tap into your zone. You can easily place a buy order here. Okay, your stop loss will always be underneath where you framed your order block. So in this sense, our order block was on the 1 hour. So our stop loss is going to be down here. Okay. From this point, 2660 all the way to 2656. That's about 30 something pips. Okay. What is it showing here? It's showing 43.7 pips. Okay. Here. And the first target I would like to target is I'm going to like to target the Asian high, right? So that's for a very short term target. And this is going to be a 1 to 3.3 setup. But if you're targeting liquidity, okay, you target old highs since you are buying now. So in the 1 hour time frame, you want to look for where your old highs are. The very first old high you see is this one. So you can target it. All right. Another target is this other old high. But I framed my target on the daily time frame. 1 day. And I'm looking at these relatively equal highs right here. So sometimes in my little experience, it is not that trading the markets is really hard. Waking up with a bias, okay, or doing your analysis to get a bias is what is quite difficult. And the part about it that says that I am not going to take any sell, I want to take only buys this week, or if my analysis is actually right, I want to take only buys this week, because obviously it can change. If my analysis if Monday was not holding the bias I had, I would have changed probably during Tuesday. Okay. But Monday held the bias that I had. And my thought process is Tuesday I'm going to take buys. Wednesday, if buys present themselves, I'm going to take buys. Thursday, if buys present themselves, I'm going to take buys. Knowing the anatomy of a weekly candle, Friday is going to come for a close. So on Friday, I'm not going to be in this market. You get. So today, like this, if buys present themselves, I'm going to take it. But my targets have been here. Okay, I was looking at this point here and this point here. Since they look relatively equal to me, okay, it's all relative and it's in your eyes. But these two highs look very clean to me. I remember a friend of mine texted me saying he wanted to take sales from this zone. And I personally told him it's not a good idea. Okay, it could be that market will sell from this zone, but I just don't think it's a good idea for you to sell from here. So if I would target, this is where my targets are. And this is a 1 to 14 risk to reward setup. Okay, you can easily modify your stop losses on the lower time frames depending on how price reacts, and you could easily have probably a 1 to 20, 1 to 30 setup on this one. But this was how I took the trade. The reason why I waited, I think I promised you guys that I'm going to give this video before Thursday. Still Thursday, so the promise is holding. But the reason why I held a bit was because I posted another trade in the group yesterday, which was Wednesday, and I wanted to add all those ones so that I don't want to be asked how I took that trade, so I just want to show you guys right here. Okay. So Wednesday's trade. Let me shrink this. So same logic. Okay, I was looking for buys, and this was um Wednesday's trade. This one right here, from here all the way to targeting the same zone. That was my stop loss. I think my stop was right here. All right. So with this, let me also show you guys the idea that I used to frame this trade. All right, let me delete this and delete this. So we saw markets trade past this high. Okay, market created a high right here, and then the market traded past this high again. Okay, when the market traded past this high, this was our swing high. Okay, if a swing high gets broken, irrespective of what anyone will tell you, if a swing high gets broken, this swing high is very important to price. Okay, so I'm talking about this swing high. So if price is going to come back to this point, this is classic support and resistance. Okay, if price is going to come back to this point, we are going to expect a reaction from this point. And what was very beautiful about this swing high is that this swing high marked the opening of the previous day, as of the previous day of the next day. And so this was Tuesday's opening candle, Wednesday's opening candle. Okay, if we're looking at the trade was taking on Wednesday, because this a trading day actually begins like a day before if you're using the UTC time frame. So like 1 hour is we're into Wednesday. Okay. So Wednesday's opening candle, which is at 23 for this particular day, opened right here. So you can see this orange line. The orange line denotes I don't really like to struggle with the time and saying every day I want to mark up where the opening is and all these things. That's why I have this indicator to do the work for me. So this denotes the opening, okay, of this particular day. So Wednesday, when we broke past this during the Asian session, and then we're coming down here, okay? This, like I said, allow the London session to do its work. Let's go on the 15-minute I show you. I don't like trading London because for something like gold, London is really a lot of noise. So there was no nice move in the London session. Seven from 8 all the way to somewhere before 13, that was like 12:30. There was nothing nice in the markets, just this small move. And I personally don't like these shadow moves. I like to take a direct move. Okay. So this was the area we marked on the 1 hour as our zone. Okay. And that swing high was involving three candles. So like usually a typical swing high, we want one candle and other candles on the left to be lower than the one in the middle. Okay. So that's how we saw it on the 1 hour. This candle is right here. This one is lower. This one is also lower. So when price is coming back to this point, very classic support and resistance. Okay, sometimes trading is not any more difficult than that. Don't let these gurus who have learned 25,000 things decide to come and confuse you with their logic. Okay, sometimes it's that simple. Price has broken this point, it's going to come back. And if it's coming back, we said what time do we like to take our trades? 14:30 at the opening of the New York Stock Exchange. It's very beautiful. You see very nice reactions. Okay. If you go through all my videos, right from 2018 or 2019, when I started this channel, I have never um I've never swayed away from the 14:30 ideology. Okay. It's always been one of the things I preach. So I really hope that you guys would follow that and just stay consistent with it. It's really a good time. So that's at around here. When price was returning to our zone 14:30, it had not really tapped our zone. Okay, so 15 minutes later, still not tapped. And right here at 15, we are tapped. Okay, we were inside our New York session. The stock exchange opens at 14:30. If you are slightly impatient, you can always place your trade, but make sure that your stop loss is going to be beneath where you framed for the entry. Okay, so your stop loss is this is the last point of this particular candle, which is 2671, and it's a really long way. Okay, so we would have a trade like 2676. That's if you entered here. 2676 all the way to 2671. That's about 50 pips of a stop loss. It's quite high, but if you're managing your risk, you should look at the reward. Okay. So you're risking 50 pips and you're targeting this particular zone. Your first target, of course, will be to clear the highs, which is right here. And this is a 1 to 3, yes, approximately a 1 to 3 setup. So a 1 to 3 setup, you're going to get, if your trade goes well, you're going to make 3 times of what you risked. Okay. And to me, it's good risk to reward. Personally, I wouldn't have my stop loss down there at 50 pips. You get because I would refine this more. But I'm just showing you how I arrived at the trade. And how I arrived at the trade was with this swing point, this point for an entry. And if I really want to refine my stop loss, I go to the 1 minute, mostly the 1 minute. I wanted to say the 5 minute, but I'm usually mostly on the 1 minute to refine my SL. That if I get in with like a slightly bigger lot size and I use my 1 minute to refine my stop. and then I target this point. Okay. So let me show you guys how I find my stop on the 1 minute for this particular trade. And I hope we can. Okay. So this is how I refine my stops. Let me show you guys a graphical representation. Let's say I have my order block, okay, or I have my point of interest where I want price to tap into, which is this point. It's as simple as the structural point that taps into my order block. Okay, so let's say swing high was formed here on the 1 minute and then it tapped into the order block. Once price trades past this point and gives me something like this, I'm putting my stop loss immediately down here, because on the 1 minute, if price trades past this point, my structure has changed. That's only on the 1 minute. Okay, but if I am going to be taking my entry on the 1 minute, that's how I want to take my entry. So sometimes with this, you can have a very tight stop loss. Sometimes on gold, something less than 10 pips, sometimes 5 pips, 2 pips. You see with some of the screenshots I post, but I don't advise that for you. Okay. For now, just learn how to get into the market right, control your risk. Okay. Don't the advice I like to give people is don't go in chasing money. Okay. Go in chasing confidence. Try your best to win a lot of trades. Okay, you will lose some. Okay, even if you lose 9 out of 10, and then you win that one, and then you are managing your risk nicely. Let's say that one setup you won was a 1 to 20 setup. That's being ambitious. But that let's say you won 3 trades. Okay, all of them 1 to 5. So that's like you having 15 profit. Okay, and then you lost the rest of your seven. The rest of the 7 trades out of 10. Okay, and you risked just one, so 1 7 times. You technically still have 15 minus 7, you still have 8 net profit. And you're confident because you still have a profitable account. Okay, so I want you guys to go in the market doing the same things, getting wins, and trying to build your confidence off of those wins. Okay, as a trader, you really need confidence. You get because in anything you're trying to do, if you don't have confidence, it will really break you. So try your best and make sure that you are learning, taking the same trades consistently over and over again. Build your confidence, and then later you can go in with that confidence looking for the money, because you're already going to be a disciplined trader. You do the same things that you were doing all the time with small money, and now it just becomes a figures game. Okay, if you are keeping your risk consistent, one loss shouldn't scare you, because you know that it will take you probably 100 trades to blow your account if you're following the figures. Okay, don't go and over leverage on one trade and then do dirty. All right, the market will do you bad. So this is how I took these 2 trades. Let me just go back. Quick recap. On the 1 hour, the same order block. Tuesday was for buys, in my opinion. So price came down here, tapped our order block, our stop loss underneath this point, and then we target highs. Okay. On Wednesday too, same thing. Price broke the zone, returned to this. Okay. And we had filled the imbalance, tapped the zone, continued to the upside. On today, Thursday, I'd be looking for the exact same thing. If price has broken a swing high around this point, if we're getting there around somewhere 1430, which is mm, I don't see any of the swing highs that fits um my criteria here. So I would look at this particular swing low. Okay, if price is coming back to this zone somewhere around 1430, I would want to take this trade and I'll place my stop somewhere underneath here. It's a risky place to put a stop because this is underneath the Asian low. Okay, and we're looking for buy. So probably this is also a good liquidity point for price to come down to and then move up. But I would figure this point, if time is right, around 1430. And then I see that move on the 1 minute that I like to see. I'm going to take that trade right here. If it fails, I'll just wait for this point and I take the trade. Okay. But the aim is to make sure that you are managing your risk. That's all trading is about. Good risk management and taking the right setups. So I'll see you guys in the next video. I hope you guys understood though. If you didn't understand, you can always type something in the comment section, draw my attention to it, and I'll try my best to answer. If you're also in the Telegram group, just I posted the group to host the comments yesterday. So just text me and then, or if you're in the channel, you can easily just join the group so that you can comment directly and I post. Okay. I'll see it faster and I'll respond faster. So Thank you guys for watching, staying to the end. I'll see you guys in the next video. If you've not subscribed to the channel, I take God beg you. I take God beg you subscribe, okay? And like the video if you actually like it, because if you do that, it's going to help YouTube's algorithm also push it to the next person, all right? So that we can all learn nicely for free, okay? Free on YouTube. Thanks.